Hi, so good afternoon, everybody. For those who don't know me, I'm David Smith, Group CFO. As you've heard, we have significant ambition and a clear route to deliver this, underpinned by the three elements we've been describing today. Our US business is central to our future success. Our digital investment program is a key enabler of our future growth, and ESG is a core underpin of our strategy, running throughout the DNA of the company. At our interim results in November and earlier today, Steve has talked about our renewed ambition. This renewed ambition is based on the foundations of delivering a strong track record of growth across revenue and profit, our order pipeline and forward contract cover. We have a strong balance sheet with cash in excess of £100 million and the option to leverage the balance sheet to support our future M&A growth. Our ambition is to deliver at least the same level of growth in the next 5 years as we have in the last 5 years. And what that means is that we are targeting organic revenue growth of mid-single-digit % on a compound rate over time, plus strategic M&A. As Mary outlined earlier, MTech is a great example of strategic M&A with strong US growth potential and good synergies with the rest of our business, both in the US and globally. We are presently in a capital-intensive phase to support our growth. We've invested and committed over £750 million in the last 5 years to support current and future growth. And that includes about £370 million of LTPA investment recovered through that contract and nearly £270 million in M&A. M&A aside, the next phase of growth will have a lower capital intensity, thereby supporting a strong long-term return on capital employed. The guidance we provided in November at our interim results remains, and all elements discussed in this seminar are included within that guidance. We intend to grow the international share of revenue from about 35% today to over 50% in the next 5+ years. We intend to grow at stable margins, albeit slightly suppressed in the next 2 years related to the upfront digital investment that Nick outlined earlier, targeting our mid to long-term margin at 12 to 13%. And a key part of our strategy is to deploy our balance sheet to support targeted and strategically aligned acquisitions to further bolster this growth. As I've touched on at our interim results and our quarterly trading update, we delivered a resilient performance through fiscal 21 with continued strong order intake and delivery throughout the COVID-19 pandemic. And we remain on track to deliver our 5th consecutive year of organic growth and maintain our expectations for the full year. Our preliminary results will be announced on May the 20th. Finally, our financial strategy remains the same. We intend to deliver revenue growth at stable margins, delivering attractive return to our shareholders. Our revenue strategy is focused around delivering growth in our 3 home and 3 priority markets and leveraging the capability of our global business in distinctive products and services with disruptive innovation. Our track record underpins our confidence in this strategy. We'll support this growth with careful organic investments, strategic M&A, and continued strong delivery and cost discipline to deliver strong returns to shareholders. And this financial strategy supports us delivering responsibly and sustainably for the benefit of all our stakeholders. I'll now hand back to Steve to conclude.
Great, thank you, David, and thank you for joining us this afternoon. We have covered a lot of ground, so let me just draw out again the 3 key strands. So firstly, our largest market opportunity is in the United States, and we have a strategy to double our revenue to more than $600 million revenue per annum over the next 5 years through both organic growth complemented by strategy-led acquisitions. Secondly, our newest investment is in digital test and evaluation to deliver next generation products and services for our customers by expanding our strength of live offerings into the virtual world and enabling the next phase of growth. And finally, fundamental to how we do business is our environmental, social, and governance responsibility. We do take this seriously and see ESG as an integral part of our growth strategy, delivering benefits to all our stakeholders. Now, with that, we have about half an hour left for this seminar, and we'll be pleased to open up the floor and take any questions on the three subjects that we've tabled this afternoon, or anything else that you may have for us. So we'll open the floor and back to you for questions, and hopefully Harry will be able to get your audio working as well.
Excellent, thank you. So the first question is from the line of Rory Smith.
Hi, good afternoon. It's Rory at Investec. Can you hear me okay?
Yep, we can.
We can, Rory.
Super, thank you. First question, two questions if I may, please. First question is for David. On your slide 28 there, you've got 370 million of essentially CapEx committed under LTPA. I was just wondering if you could remind us how that's broken down in terms of what's already been spent and what's still to be spent, and over what time frame, please. And maybe I'll come back to the second question after that.
Yeah, by the end of this year, we will have spent about half of that money. The next 2 years, probably, there or thereabouts, another 50 million each, and then there's a lower amount over the remaining life through 2028 of the program. So we're a good way into the investment now. There's a lot of different projects to deliver, but that's about where we are.
Great, thank you so much. And my second question, just relating to Mary's section on US growth. Forgive me if I've misunderstood this, but is that sort of 50-50 organic M&A split predicated solely on RCVL going to a program of record, or does it also include some wins on some of the other RCV programs? And if so, which of the US defense primes are you competing with, and which ones are you potentially partnering with on some of those other programs in order to reach that organic revenue target in 5 to 6 years? Thank you.
Rory, thank you. This is actually multiple, probably a dozen or more programs that we're looking at the growth in. We have programs both in the maritime business, which we're partnered with GA, EB, Electric Boat on those programs. And we have other teaming partners that we're going forward on other modernization programs in the maritime market. And as Steve articulated, our strongest market is in the land, the Army domain. So in that market, RCV is one. We're looking at partnering in other programs such as OMFE, Optionally Manned Fighting Vehicle. We're partnering with Oshkosh on that program going forward. And we have several other programs in that domain. Also with the ISR portfolio, we partner with some large businesses. We are a prime. Our first to market, we work with the large businesses to include Raytheon Vision Systems and Raytheon Global. So we do have a broad range of teaming partners, Rory, and we do have a dozen or more really strategic capture programs we're going after to build that portfolio. So it isn't just RC Light, that is an exemplar program. It is one of our strongest and successful programs, but we have other ones in the portfolio. So
I'll just build on that, Mary. Just to be crystal clear, Rory, the overall growth to more than doubling the US business is what we were saying would be 50-50 through organic driven growth and complementary strategy-led acquisitions. As Mary said, RCV Light is just but one of the programs that we're pursuing that would support that organic growth. But it is just one, and it's a very important one that we're doing very well on. But there are a number of programs across the air, land, and maritime space that we are pursuing. And I'd also remind you, as you've been following the story of QinetiQ's development over recent years, Mary also mentioned moving into larger, longer-term programs. And as you'll know, that's been part of our group strategy for many years, and that gives us strength in the organic growth component. Many of the programs that we're now pursuing in the US are multi-10 or multi-100 million program. So we're not reliant on just the success of one program to support this growth strategy. We're pursuing numerous programs as part of the growth.
That's understood.
Hopefully that answers your question, Rory.
It does. Thank you very much.
Thank you, Rory.
Thank you. The next question is from the line of Liran Lee.
Hello. Sorry, I think, can you hear
Hi,
me now?
Liran.
Okay.
We've got you
Yeah,
now.
hi everyone. Thank you for this. Yeah, I'm Liran from MFS. I have two questions, please. So my first one is just around your kind of midterm organic growth target. I was just wondering how much of that depends on the overall defense budget environment being, I guess, in a growth mode, especially in the UK. I guess in the US is sort of flattening out. Just what's the kind of assumption you're baking into your growth outlook with regards to the defense budget? And then my second question is around the LTPA investment. I know part of the reasons for the investment was to help you grow your international customer base through your service offering, the LTPA investment. Do you have any, can you give some, I guess, just how is that panning out at the moment? Are you attracting international interest through your investment into these facilities? Just some color on that would be helpful. Thank you.
Great question, Liran. I'm very pleased to do that. I'll pick up the LTPA growth, give you a couple of examples, and I'll make a comment on overall macro budgets, and then hand over to David to sort of pick up the specific on midterm guidance. You're absolutely right. When we actively chose to invest in the long-term partner agreement to modernize the capabilities, that was first and foremost to modernize them and meet our UK customer needs, but also to ensure that we could then attract other customers in to utilize those ranges in the UK and export the knowledge and skills to support our wider international growth. As Nick said, the overall investment in the capability improvement plan on our UK capability is going exceptionally well, and we're certainly on track to complete all elements of the 2-year transformation program by the end of March this month, in fact. So that's going very well. And then in terms of using that investment to leverage wider growth opportunities, yes, we have made good inroads on that and are already seeing financial benefits as a result of that activity. I tend to think about this as both import and as export. In terms of import, Nick also mentioned a contract that we won towards the end of last year with the US Air Force in Europe, a customer that used to use the LTPA ranges about 5 to 10 years ago, but actually found that they weren't fit for purpose. Now, as part of our overall modernization, we've been able to re-secure that customer, and now already the US Air Force is using our ranges in the UK with their F-15 fleet based in Lakenheath, and is also looking to expand that into their wider assets that are here in the UK, such as their F-35 base going forward. So that's a real positive win and additional growth that's coming to our company from an import perspective. And then from an export point of view, we have been able to export some of the knowledge and skill from what we undertake in the LTPA to our team in Australia. And over the last 18 months, they've been able to position, win, design, develop and construct an unmanned air systems test range in Queensland. And that test range is being utilized. In fact, you probably saw only in the last week that Boeing have undertaken their first flight trials of their Loyal Wingman unmanned air system that's been designed and built in Australia. And that's been at this range, which has benefited from exporting the skills, knowledge and capability from the UK. So the LTPA modernisation is going extremely well. It absolutely is now yielding its wider growth from that investment, and the investment in the digitisation of test and evaluation that Nick mentioned will take us even further forward. In terms of your question on midterm guidance, I always like to try to position QinetiQ in the markets that it operates in relative to the macro budget. And as you said, the budget in the United States is huge, and we are a relative small player, and we are following the modernization vectors so that we can effectively dislocate our growth trajectories from any macro trends. And it's absolutely possible to see the level of growth that we are predicting in the US market. When it comes to the UK market, clearly there are some positive trends too, with the 4-year settlement, £16 billion additional investment going into UK defence spending. And again, here I would bring our strategy to bear, a strategy that is about mission-led innovation, is about delivering more for less for our customer. And despite the headline benefits in defence, we know that over the coming weeks and months, some of the announcements will have some pressure on extant programs coming from them. And our strategy as a company is to understand the pressures, whether it's about the threat vector, whether it's about economic pressure, and work with our customer to deliver more for less. And if I give one example of the Engineering Delivery Partner Program, EDP, that's been extremely successful in the last 2 years. And that's because we're partnering with the customer in a way to deliver more value for their expenditure. And they're seeing that as a key enabler for their strategy. So from a strategy side, we absolutely can see the growth trajectory that we're on based on a focused strategy and the right mindset in working with our customers. But David, could you maybe then pick up on the medium-term guidance that we've given within the update today?
Yeah, so basically what we said is that we believe that we can grow the business organically at mid-single digit growth rates over time. And in fact, actually, Mary's picture really would be higher than that. We do expect double-digit growth in the US. And that's really borne out by what Steve's saying, that if we look at the US, and Mary did have a chart on this, the kind of area of the market that we're operating in, particularly around robotics, autonomy, and sensing, is growing at double-digit rates already. So actually, that's a very reasonable sort of growth projection, we think, for that business, especially if we are able to start capturing the programs of records and the growth that comes through that. In the rest of our markets, I mean, the Australians are significantly increasing their defence spend, and they have a lot of similar needs, I think, in terms of modernising capability to the UK and indeed the US, and therefore the kind of things that we are capable of now globally will be very useful, I think, in the US, and therefore we see good potential to grow that market. And then in the UK, the government has announced the next 4 years defence spend, which does include an increment over 20 billion from the previous version. But as Steve says, what we know that we have to do as a company is really focus on how we can get them the right help to develop new solutions to the changing threats that they're facing up to. And particularly, I think, how we can do that in a way that also saves them money and also helps them save carbon as well, I think, going forward. So we see plenty of opportunity. So, I think the mid-single digit growth, organic growth target is a very achievable target that we're setting out to deliver. And we would absolutely see the opportunity to further enhance that with inorganic growth as well.
Thank you very much. If I can just to follow up on the first, the LTPA bit, I'm not sure if you're able to just quantify the international opportunity overall that you're seeing so far. What sort of percentage of incremental opportunity are we talking about? Thank you.
Well, as I think my colleagues described, the specifics contracts like the USAFE is $27 million. We're running at the moment Formidable Shield, which is not part of the LTPA, but it's facilitated by LTPA facilities. That's a a multi-million-dollar project as well. So we are now getting good revenue streams from these sort of projects. I mean, this year we're probably going to see, I would guess, in the sort of 20-30 million pound range. It will increase over time. So, you know, it's becoming a very viable way to grow the business in addition to other opportunities that we see as well. So it's an important byproduct of modernising the UK facilities.
Very much.
Thank you, Liren. The next question is from the line of David Barker.
Hello there, can you hear me okay?
We can. Hi, David.
Fantastic. Thanks for taking my question. So I've got a couple. I think first, a lot of the focus today has been on your international opportunities in the US. But in your pie charts, you're also highlighting some growth in, I think, Germany, Canada, and Belgium. Can you talk a little bit about these growth opportunities? Are they starting from a small base today, and do you need to do any M&A to get there? And then I guess sticking on the regions as well, what are you thinking in terms of the Middle East? Because I know it's a smaller exposure for you at the moment.
I mean, maybe David, if I can start, and given we've got the leader of space in the room, I'll ask Nick to say a few words on space. I think first of all, David, I would start with the focus of our strategy. And we've been really clear on the geographies that are important. So we're trying to build, breadth and depth in our chosen, what we call home and priority countries. And, first of all, if I define what we mean by home country, by home country, we mean that we have an indigenous industrial capability of scale, more than 250 people, with a direct customer relationship. And those three countries that we have that meet that criteria are the United Kingdom, the US, and Australia. And the first layer of our strategy is really about building out and growing those countries. And as you've seen within the United States, that was a very long and thought through strategy about how we would re-enter that market and grow by changing the governance, thinking about the strategy, finding the right company and driving the integration, and then pursuing the next phase of growth through organic and then complementary acquisitions. The same approach is applied in Australia. We've already undertaken one acquisition in Australia. In fact, the first of our 7 acquisitions was in Australia, and the same strategy applies. We are growing rapidly in Australia through organic growth, and we're also looking at complementary acquisitions. So that's our 3 home countries. We then have 3 priority countries, and what we mean by that is these are 3 countries that we are focused on, that in the next 5 to 10 years we could see them meeting the criteria of what I've just described as a home country. And as you pointed out, that's Belgium, Canada, and Germany. So by definition, all of them today are much smaller than the 3 home countries that I've described, but all of them we see specific opportunities that align with our overall growth trajectory. And those opportunities will certainly be organic in nature and may or may not actually incorporate some acquisitions going forward. We were just talking about test and evaluation and the LTPA. And as an example, Canada is an example where we see modernisation of test and evaluation opportunity, and we're undertaking, and I think I've mentioned this before publicly, a study for the Canadian Air Force right now, looking at their test ranges and how they might go about modernisation, and that might bring a significant opportunity for us in Canada. Just before I hand over to Nick, yes, we do have some interest in the Middle East. We do those through joint ventures, but it's a much smaller part of our overall company portfolio than the 6 key countries that we're focused on from a home and priority perspective. Nick, do you just want to pick up a few words about Belgium?
Yeah, I mean, I think, first of all, space is a domain that defence and security customers are getting much more interested in, and you can see that in the trends globally. And we've got some really excellent capabilities in cyber information security to serve that domain, and we're looking closely at how we continue our growth trajectory in it. In Belgium, we've got a super space products business that has primarily been working for the European Space Agency, developing what I'd say is highly stable, unique small satellites and berthing and docking mechanisms and an early stage interesting robotics. We're keen to grow that into the military domain. We're hoping to sign up a first military customer for a major program. So it forms, you know, a great capability. And actually, over the last year or two, we've seen it grow almost by 50%. So it's doing really well right now. Just to give you a little flavour of space and some of the things we do.
David, does that answer your question, or would you like?
No, that's very helpful. And I have one quick follow-up, just on a different topic. Obviously, I think in the last 12 months, OptaSense and QTS had been drags on the group to some degree. Obviously, OptaSense is no longer a concern. What's the kind of latest on QTS in terms of trading momentum, and how do you expect this to impact the next sort of 6 to 12 months?
Yeah, I'll say a few words. Maybe David would like to add. I mean, QTS was clearly impacted directly by the pandemic, as you know, travel restrictions were put in place. You know, customers weren't able to travel. You know, it made it more difficult to transport the product, and you know, a number of trials and exercises around the world, you know, were suspended or cancelled. So we, without a doubt, and we reported that, you know, had the impact on QTS during the course of the year. Momentum has certainly started to rebuild, and we've reported previously that we've seen, you know, green shoots of customers returning and reordering. Yeah, and we're really pleased with the level of rebuild in momentum, and we would expect next year, you know, things to start to return to normality from a QTS point of view. And long term, we absolutely are still confident in the business. It's an integral part to our overall company strategy. You know, next generation targets are absolutely part of how we deliver test and evaluation, you know, operational experimentation and training and rehearsal. So, yeah, a really integral part to our business. And it's just the consequence of the pandemic that we saw during, you know, the financial year that we're just concluding. David, would you like to put some quantification around that?
Yeah, I mean, we did have a difficult first half for QTS, and they have seen improvement in order intake. They're back into the black in terms of operational results as well, which is pleasing. And I think by next year, sometime during next year, maybe second half, we'll be back to previous levels of business there. I think the other thing about QTS is increasingly it's part of the integrated view of how we're developing the business. So we're just investing actually in a new project in Australia, and one of the product streams of that will be selling QTS products into Australia down the road. We're looking at opportunities in the US as well for their products, and we've got an active program there. So increasingly, I think the future of QTS as an integrated part of our business in most of our countries that we operate in is really being assured, and we've made a lot of progress, I think, on that over the last 6 months or so.
Fantastic. Well, thanks for the answers, and also for the seminar this afternoon.
Thank you.
Great, thank you, David.
So I think we've just got time for one last question from the line of Sam Thomas. You able to unmute yourself, Sam? Unfortunately not. So Steve, I think I'll hand back to you to close.
Okay, thank you, John. So, well, thank you again to all of you for joining us this afternoon. My key message is that we're on track for delivering a successful 5th year of growth, and we have a significant growth opportunity ahead over the next 5 years. This seminar has focused on 3 enablers, which are key to realizing our renewed ambition to accelerate sustainable growth and deliver enhanced returns for our shareholders. I really do hope that this seminar has provided you with a greater understanding and support to your investment case in QinetiQ. And we'd really welcome your feedback to help shape topics for the future that you would find good for your benefit. Thank you again for your time, and we look forward to your further questions offline. Thank you.